What's up, guys? It is Monday, October 24th, and this is the crypto market update. So starting off with the 10-year yield bonds, we are on the weekly chart, and as you can see, we still got the MACD rise in green, stock RSI in this overbought territory flatlining, and we have consecutive months, about two and a half months now of green candles on the weekly chart. So until we can see a sign of the momentum shifting, we have to say that bond yields are going to continue to rise. You can see that on the 3-day chart, we're crossing back up on the stock RSI. The MACD is still green. We don't have a cross down on the TSI. So what we can expect is the bond yields to continue to rise. And you can see that trend line right there that we're holding as support. And we have been holding as support since about July back here. Then we have for the dollar, we are on the weekly chart. And we do see the stock RSI crossing down right now. We just got to get through this 50 line. We're close. And then the TSI looks like it's crossing down right here. And then the MACD looks like it's going to cross down as well. And the RSI looking like we are close to having this hidden bearish divergence play out where we have high, lower high, or equal high right here. But we have a high, higher high in the price action. So it does look like we're close to having that play out, but first we need to break the low that we're at right now. You can see on the daily chart, we've been holding the EMA ribbon as support for a very long time now, ever since, you could say, back here, but we haven't gone below it for more than a couple days since like January, February of this year. So now that we're getting close to it, it could be time. So that would mean that the dollar needs to break down below like 110. I'd say 110 would be a better kind of look. The 50 moving average is sitting around like 110.70, but I'd like to see us get below 110, that psychological level. You can see I grabbed this low to this high for the Fibonacci retracement, sitting around 110.94. So ultimately, if we break below that level, that's definitely a good sign. And you can see on the daily chart that we do have the TSI, MACD, and stock RSI pushing down with downwards momentum. If we go to the 3-day chart, you can see that to be the case. So on the lower and 1-day and 3-day chart, it's pretty high time frame, but if we're comparing it to like the weekly chart, 2-week, monthly chart for the dollar, we could say that the lower time frames are showing signs of losing momentum. And so the 1-day, the 2-day, 3-day, 4-day, they're all crossing down here. Let's look at the 5-day. Yeah, so the lower time frames are looking like, hey, we're losing momentum. We just need to see a follow through on the weekly chart. Let's look at the 10-day chart. Yeah, we're close. We're really, really close. There needs to be some catalyst or event to go along with the dollar crashing hard. So you can even see that we're like really curling over here. You can see the 10-day chart. We have one red candle, second red candle. So 20 days of we've already found our top, and now we're heading down here. If we really just break that trend line, which coincides with the EMA ribbon, it'll look really good. So yeah, if we break down below 110, I would say 110 to 1, and then ultimately like 108, that would be a good call. So now we can go to the NASDAQ 100, and we are on the weekly chart. Okay, so the weekly chart, we're seeing that bullish divergence, a low, higher low, low, lower low. We need to see a cross up with the price action to get above for a follow through. We're sitting below the weekly 200 moving average right now, which is sitting around like 11,550. We're like trying to reclaim it right now. So we'll see how that goes. But ultimately, if we take this high down to this low, stretch it out, we need to get above 13,000. If we can get above 13,000, hold as support there, and then that's going to be looking good as far as, all right, now we can start a new bullish phase for the stock market, because that would get us back up to here where this would come down. And if we break above, hold as support, now we can start to turn these moving averages back around and then probably hit this, come back down, and then head on our way up. But if we break down, if we take out this low, I would say like we're ready to drop off a cliff. Like really, like we are teetering on the edge. So it's like any more downwards pressure, it's probably not going to be good. You can see that if we go to the weekly chart and we're looking at, say like this is, it's a very weak support. But back here, this was back in like June of 2020 when we finally got above this high right here, right before the COVID crash. We haven't retested it yet, in a sense. We're close to doing it. So that's around like 9,750 to 10,000. So maybe we could pull down a little more. But I mean, like, there's really no like market structure really built for the support back here. Like, if I take maybe this low to this high, we stretch it out, that I guess that would bring us down to the golden ratio around the 618. But I mean, like, this is the first time in a very long time, like 2008, 2009, the great financial crash, since we have on the weekly chart flipped the EMA ribbon to bearish. You can even just see there. Let's pull this up. So you can see this whole time for the past 10 years plus, EMA ribbon's been green, 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 green. And then we finally flipped it to bearish starting like April of this year. That's like similar to back here where April of 2008, we had flipped this bearish. And then ultimately September started the beginning of the crash until we found our bottom around like the middle of November of crashing down here. So, I mean, if we're repeating the past, that we're definitely in a very caution danger zone right now, I would say. Yeah, these next couple months here could spell something like this. And keep in mind, these are very quick. So like we dropped 40% in like 60 days in the NASDAQ 100. And then ultimately we found our bottom and we started chugging our way back up here. I mean, if we were to do the same thing, 40% in 60 days, that would bring us right to the beginning of 2023. And we'd be at like 7,100 basically for the NASDAQ 100. And I mean, like, it's not out of the realms here, because if we took that low, that high, it would bring us down to that 786 area. It's definitely possible. I'm not going to put it out of the cards here. We can't deny that the last time that this EMA ribbon flipped bearish was the great financial crisis. We can't deny that. And we haven't been below the 200-week moving average ever since that point too. And now we're sitting below it. So those things we need to keep in mind, because we can't just discount them. So now let's go to the Bitcoin chart. And now we're on the weekly. Still maintaining that key support where that was that level right here back in the top of 2017. And then we got hung up here right at the end of 2020 before shooting up from 20K to 60K. And now we finally pull back down to that area, and we've been holding support for like 3 months now on it. So it's key level. If we do break this key level though, where could we go? So I'm taking this low to this high. And I would say that like, if we're going to put a new low, it would be the $14,200 area. I wouldn't say we're going to go to 10,000, 7,000, 5,000. I would say that would be this area. You can see that if I draw that line out here, that was that area where, you know, we had a parabolic kind of sharp blow off top, come back down, retest that level, get closer to retesting it. But ultimately, when we broke out above that level, we never came back to retest it. And now, like, if we were to break this low, I would say that would be the bottom right here. And then we would get our way out and then go back on our uptrend. If we don't break this and set a new low, I would say we take this high to this low and say that we need to get back above 23,500 to $24,000. Not like, I would say like 25,000 around there. That would get us back to where this high is, and we would need to hold that as support. So we would need to come back up, hold this as support, maybe coil up like that. We have the moving averages coming in, and then we'd retest the $30,000 to $30,000 area. Then if we could break above that, then we would retest $40,000 to $44,000 area. And then if we broke that, we would retest all-time high. It's looking like. So those are the scenarios. We are just in a range between the $24,000, $25,000 level to like the 18,700 kind of levels, like where we want to hold wherever the pink Fibonacci moving average is, which is sitting right now around $19,000. So we're in just this range of $19,000 to $25,000. If we're talking about the bigger range, I would say there's like a smaller range in here that like around like $20,000. There, if I go to the lower time frame, you can see there's been multiple kind of area that we keep getting rejected by, which is a $20,500 level. So until we break out of one of those and hold it as support, so you can see like right here, until we can get above here, hold that support, or until we break below, get rejected by the Fibonacci moving average and start taking out the low, we're just going to be range bound. It's been really boring. It's just been sideways action for it since like June now. So you could really just set up an alert where it's like, all right, so you see I have the orange dashes right here. So like if it breaks this level, then I'll get an alert to my phone telling me that. Or if it breaks, say, 20,500 and put that there, then I'll get an alert and I'll know that it broke that level. You know what I mean? So like we can save a lot of time and get our time back by not staring at the charts, getting too wrapped up in it on the short term, but instead just map out the key levels that we need to break in order to know that there's going to be an actual trend forming. But until then, it's just going to be range bound. You can see it. Keep in mind though, I mean, like, don't get me wrong, there's going to be a big move soon. You can see that this coming down, there's going to be a convergence here, and that's going to put us around like the middle of November where we could stretch to as far as converging here. But like, there's no need to get wrapped up in the day to day. It'll be a lot of stress, a lot of time that could be allocated into other areas of your life where you could spend more time doing those things and just waiting for this to play out. You know, we have the levels marked. There's no point in staring at it all day. So mark your levels on your charts. If you don't know how to do it, join the Discord in the bio. We have tutorials in there on how to use TradingView and set up your indicators, etc. So that's what I'm seeing. We definitely need to hold the 19,000, and then for the short term, get back above like 19,800 to 20,000, ultimately 20,500. If we're keeping it simple, the key levels are 19,000 or 18,800, 20,500, and then around 25,000 getting back above to hold that support. Yeah, so that's what I'm saying. And as far as the weekly chart goes, it's showing good signs because we're still rising in the MACD. It's green rising. So that's all good. And the stock RSI is still above here. It's just the moment that if we cross down below this 50 line and then this MACD falls, TSI falls, that's when we're in trouble. So that's what I'm going to look for. Like, you can even set an alert on here. I'll get notified if the stock RSI crosses down below there. And then we know that, all right, maybe we might set a new low. But until then, you know, we can't say that things are going to flip and go down crazy until these momentum indicators flip down. They're holding their own right now. So now we got XRP and we're on the weekly chart. We're holding the EMA ribbon as support so far. So that is sitting around like 44 cents. We're seeing the stock RSI. We're still above here, but we don't want to see it cross down through the middle. That's for sure. So the blue's starting to come down here and the pink's trying to get above it, but they're kind of like in a tug of war battle right now, waiting to see what the direction is going to be. So if we look at the key levels, So we got 45 cents where we're at right now as a key support. And then we got 51 cents as a level to definitely hold that support and get above, because that's resistance right now. We need to hold like where we're at now, basically, because you can see on the weekly chart, the bodies of the candles all holding above it. Even here, body closed and then body was below it. And then we finally got above it. So definitely key level like 44 cents. Then we need to get above and hold the support around 49 cents to 50 cents. Get back above 52 cents to 53 cents. And then at that point, like we're getting above these moving averages right here. So it starts to look more promising. And then it's like that 55 cent level is very 55, 56 cents. A lot of resistance. If we can get in there, break above, hold that support, then we're looking at 66 to 72 cents, I'd say, around this area. And that will coincide with these tops. We stretch this out a little bit more. This drop off area right here. So if we could get back up to here and then ultimately hold this as support, then I'd say we're going to come to the $1.25 mark. And then if we can break above that, now we're talking $1.88, retesting these highs over here. So that's what we need to see. If we look at the 6-day chart real quick, yeah, our support is 44 cents. And then our resistance right now is like 55 cents. Till we break one of those, there's going to be nothing happening besides just ranging in between those. So we can set our alerts and get notified when that's the case. We can see on the daily chart, we're getting like a golden cross right now, but this moving average is like facing down. Usually you like to see it start to curl back up, hold that support. So yeah, definitely want to see us reclaim back above this 200 moving average, the yellow one here, which is sitting around like 47.5 cents. So until then, we're just gonna have to wait. You can see that we're still in this oversold territory. The momentum's not there yet. If we go to the 12-hour chart, we're starting to see some signs that we're trying to curl back up, but we do have this resistance of the EMA ribbon over our head. This whole time we're holding that support. Now we're below it, rejection. Now we really need to just get back above it, which is sitting around like 48 cents. So that's what we need to be watching. We want to watch these indicators down here, watch the momentum pick back up, and we definitely want to hold our key supports, which we know is, yeah, where we're at now, the 44 cents that we've been saying. So we're going to keep our eyes on it. If you want to get updated with the automated signals, join our Discord. The link's in the bio. If you want to get going on our free masterclass accelerator for the crypto market, go to our website, www.stargate-ventures.com. Links in the bio there. Get going on some education while the market's boring, so you can be prepared for when it picks back up again. So I'll see you in the Discord. Hop over to the website, get your access to your free accelerator, and I'll see you in the next video.